Hello, I am David Bransbury, Tax and Accounting Support Director at Clements Cummings.
Hi, I'm Kinga, and I'm also a Tax and Accounting Support Director at Clements Cummings. So, David, what's happening in the autumn statement, and how is this affecting the tax, especially from April 2023?
Well, we had lots of changes last year. We've now got Rishi Sunak as Prime Minister and Jeremy Hunt as Chancellor. The previous friends, we had Liz Truss and Kwasi Kwarteng, and they went for low tax, high growth policy while they're in power. This has been changed by this mini budget and other announcements. Most of the tax reductions have been removed, but one of the key changes that have been kept has been with the reversal from the 6th of November 2022 of the national insurance increase. So, Kinga, what's happening with corporation tax?
Where for the number of years companies paid the tax at 19%. From April 2023, this changing from between 19 and 25%. So if your profits are below £50,000, you're still paying 19%. However, above 250,000, that rate is now 25%. There is a marginal rate between 50 and 250,000, which is calculated on a sliding scale. And basically, in a short, you will pay 19% up to 50,000, and then 26.5 between the 50 and 250. And that's how it's going to be. That is called as an effective rate.
So if you do some tax planning and you bring forward some income, where you can do, but defer some income, you might save some tax. Is that right?
Yeah, that's definitely right.
Okay. So
there was quite a few reforms into research and development tax reliefs. Can you tell us about that, David?
Yeah, sadly, I know about these things. There's been lots of changes, but there have been two key ones. Both affect the RD claims from accounting periods beginning or after the 1st of April 2023. Firstly, they're restricting certain costs to UK-only expenditure. And they're also changing the way the claims are made, including the name of the director has to be stated who's agreed the claim. And if you've used an agent to prepare and advise the claim, they also have to actually been stated. Secondly, for SMEs, the tax relief is reduced from 230% of the expenditure to only 186% of the expenditure. And if you claim a cash refund of the R&D claim, the amount of loss that is paid is reduced from 14.5% just to 10%. The government wants more companies to apply for this relief, but they're trying to stop the more erroneous claims. There's been lots of companies out there encouraging companies to do R&D claims, and there's been a bit of a backlog, and they're trying to tidy up the system. So, Kinga, we've had some cold weather recently, but what's this personal tax freeze that's going on?
So the income tax rates are staying the same for 23-24 as they were in 22-23. The tax allowances ban are staying the same. As the autumn statement stated, the proposal is for this to stay in place until April 2028. So we've got some stability there. Because of the freezing of allowances, the income tax raises for taxpayers paying 40% and more got frozen as well. But there is a little bit of a twist with those earning 150,000 and more, which with they paying the rate at 45%. and that rate band's been reduced to 125,140 from April 2023. Can you tell us, David, about the dividends tax rate?
Yeah, we always knew it was going up, and we thought it was going down, but no, it's still going up. So yes, from April 22, the dividend tax rates were increased by 1.25. So a basic rate taxpayer, the dividend tax rate will be 8.75% instead of 7.5%. What the autumn statement did, which nobody was expecting this, is decrease the long-standing tax-free allowance of 2,000. So from 6th of April 2023 is just £1,000. And from 6th of April 2024, it's just £500. Similarly, they've done a similar thing on capital gains tax. The annual capital gains tax annual exempt amount is currently £12,300. From 6th of April 2023, is going down to £6,000. And then from 2024, is going down to £3,000. So that's something that nobody was expecting. But Kinga, now it's something very close to our hearts. MTD for ITSA.
And so MTD is something that we've been follow very closely, as this will affect accountancy world massively. So it was first announced in 2015. And it became mandatory for VAT registered businesses from the 1st of April 2022. So it's been around for a while, but the next step that government would like to introduce is MTB for income tax. So first of all, it was going to be for self-employed people and people with rental income of just under £10,000, and those going to be from April 2024. In December, however, the government announced a delay to this date. So, and also the rates of income gone up, thank God. And now we've got 50,000 for self-employment people. They will need to be reporting quarterly from April 2026. And then following that, there will be mandatory from April 2027 for anyone over income of £30,000. And those with less than 30,000 income, partnership and companies, the government will be announcing plans for MTD in the future. So basically, in a short, the MTV will be a system where you need to record your income and expenses electronically using a software of your choice, and submit those reporting every quarter. I trust this recording has been helpful to you.
And if you need to get in help or any further advice, please get in touch. Thank you.